Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. What I do on the channel is I usually post a lot of charts, and someone in the comments section said, hey, what about the shipping tanker? You know, maybe I should chart some of those. And I've got some behind me. I've got a bunch of them, and I probably have the top 5 or 6. I don't know this sector as well, but the charts are still going to read similar to everything else. But I may be missing some companies that you guys want charted in the shipping area. So these are kind of the mainstream ones. I don't know how well they did in the last bull market. I tried to grab a bunch of data, but some of these, they really tanked between the last bull market and now. So I cut some of them to a 5-year instead of the max because you can't really tell the details on the tail of it. And we're just looking at the tail here, the tails. So I'll show you what I'm looking at. I'll describe what I see in the patterns. I threw some other companies at the bottom, more energy service type companies as well, because I think all of these are still young in their breakouts. So I wanted to get a bunch of companies which could potentially be good investments for people on the channel. And again, I don't know this sector as well. I just want everyone to know that. And this is just my financial opinion, and we're just looking at charts. They do look beaten down, that is for sure. So let's jump in. I'll give you my opinion on them. So I'm going to start with Dht Holdings here. And you can see that we're kind of coiling up here. We've got the pattern, and what happens is we came from the bottom in. So we came from the bottom up, and then we created this big pattern here. And usually when you break to the upside, you're going to see a big run. And the price projection is basically the height of this triangle. So you take this height and you can project it upward. Looking at this, it does look like it's trying to put in a bottom. And it doesn't look too bad just looking at the chart for Dht Holdings. So this one looks pretty good, and it looks like it's trying to break to the upside of this pattern that we've got. TK Shipping looks really good as well. We've got the downtrend line, and it looks like we're trying to break the downtrend line right now. So if shipping is going to do incredibly well, I would be buying it, right here on this breakout before it breaks out and goes. It could break out and backtest as well, and that's very common and normal to break out a little bit and then come back and backtest the trend line, because this is a very long trend line. So this one looks really good as well. Going to Ardmore Shipping Corporation, again, it looks very close to TK Shipping. You draw a trend line in, and what I did is I kind of hit where the majority of hits are. So 1, 2, 3, 4, 5, 6, 7, 8. There's a whole bunch of ones hitting in here. And I think that's the strongest trend line that you can draw. And it looks like we're just trying to break it at any point now. And usually what happens is we break and then they come back and backtest. But this one also looks like it's beaten down over time. We've got Uranium, which you draw the trend line through the tops of these guys here with the most amount of hits. And I think we're basically breaking at any point here, or have broken this trend line, because you can draw it a couple different ways. You can see that the lows are stepping up a little bit. So you've got a slight low stepping up. So I would consider this to be a breakout. I would watch it for a retest, backtest, or maybe it just continues higher. But that one looks pretty good if you know a lot about it, or if you do some research into it. I bet you they're going to do pretty well. Here's Scorpio Tankers, and this guy looks like it's prime, almost ready to break at any second. You got the downtrend line, and at any point we're ready to break here. So that one also looks good for Scorpio Tankers. Here is Frontline Limited, and you can see a pattern that developed, and we're breaking to the upside right now. So that one looks like it's good to run for Frontline. Looking at some energy companies and energy service companies, this is an exploration. You draw the lines in here, and you've got a break to the upside for Ring Energy. It's a clear break. We've got Oceaneering International Incorporated. You draw the trend line in, And this one's also broken to the upside, and it's continuing to move on up. So that one looks good. Dht Holding Corporation. We're putting in a massive pattern here. The size of the base of it is the projected move upward, which would project a very large move to the upside. And we're coming on up, looking like we're going to try to break this top trend line, downtrend line of the pattern. So this one looks really interesting right here. We have Helix Energy Solutions Group. This is one that I purchased recently. We've got a massive move lower, all the way to 2009. We came back up, and we were still in this corrective downtrend. Now, I don't have a lot of money in this, but I've got a little bit riding on this break. Hopefully, we break to the upside here at any second. The projected move would be the height of this triangle base coming in, would be the projected move up, and it's probably $40-something or something like that. But this is a big consolidation pattern that's forming here, and I added in just a little bit of money in it. And then I also own Tetra Technologies, another energy service company. We broke the pattern, the descending wedge pattern. I bought it right in the tip over here, and we're moving on up. And again, guys, this isn't an easy ride per se. You're still going to need to know a lot about these companies to really be able to hold on. I can throw out big numbers for you. I can throw out that some of these could be 10 baggers or 20 baggers. What that means is it's 10 times your money or 20 times your money. The problem that you're going to have to deal with is the volatility between this point and some point that's way up there. You're going to have 40-50% pullbacks. I've had it in the companies that I own that I've been riding up. 30, 40, 50% pullbacks are normal. You're going to have to get used to it, and you're going to have to focus on value, not on the price movements. These are massive charts that are breaking. These are a bottom. To me, they look like a large bottoming pattern or process where we're going to break them, which a lot of them are. And then you want to hold on to them for the duration of whatever bull market is coming in front of us. Some of them, I'm guessing 10 years. It's probably my guess would be a nice round number to guess. So in 10 years, you may have a year where it goes kind of sideways, and then it just launches again. So it's more about knowing the value, being patient, and holding on than it is about trying to get these short-term movements. The short-term movements are going to throw you all around. They're going to make a lot of people look very stupid as it throws people around, and you're trying to buy in and sell and do all this emotional-based trading. And you're going to be potentially losing money on something where in Tetra Technologies, I bought it at 50 cents and I've been holding on the entire time. Most of you are going to say, oh, well, that's easy. That's easy because you bought it at 50 cents. That's what everyone's going to put in the comments section. You bought at a good price. Majority of people aren't going to buy it when I bought it, because they're going to say it was going down, it's going to go to zero, and they would have looked at the price chart and not known what to do. I had the valuations of the oil to gold to oil ratio, which was at 50 to 1, and it was improving. That came from over 100 to 1. We had a chart pattern that looks like Tetra Technologies behind me with a descending wedge pattern. And if you zoom in, we even had further analysis that pointed to an upward move with buying pressure all over the place, putting in bullish engulfings all over the place, bullish piercings. We had a move higher and then a ramp back down, which is a lead into a big move that's coming. You have to basically know what you're doing to identify that and to be able to take advantage of the low prices. Because I knew value and I knew technical analysis from multiple angles and even technical analysis, I guess, that I developed in terms of buying pressure and selling pressure and what a bottom looks like. And then I went for it. I used portfolio allocation, less than 5% in my portfolio. This one I didn't put as much in. I think I don't know what I put in it. I probably have like 3,000 shares or something at 50 cents. So no, more than that. $3,000 at 50 cents. So that's, yeah, 6,000 shares or whatever. So yeah, I think I have 6,000 shares. And that's what I put in it. And I put that amount in there. I said, I'll buy it. It was 50 cents was my cost basis. And I've been riding this thing up. Now, if you were to zoom in on the tails there's some good pullbacks in there. And it's not as easy as what most people think if you're a new investor. For me, I look at the value and I say, this thing's so low, it's ridiculous. And a lot of these, like I just recently bought Helix as well, the Helix Energy Solutions group down here. This one is just starting to try to break out. And this one looks really interesting, the Helix Energy Solutions group. And if we get a break here, the lowest risk spot is to buy the breakout. And usually what I do is I might put some money in here and then buy more on the breakout. But this is a smaller position of mine. It's not a huge position. I kind of try to limit my risk, but I mean, the chart looks fantastic here. If we break to the upside, and I don't see any reason why we wouldn't, oil's doing quite well. I think eventually the energy service companies, the money will flow through the exploration and production companies and eventually to the service companies afterwards. So I'm adding a little bit in some of those. I did buy CPG, Crescent Point Energy, and I bought Northern Oil and Gas. Those are two exploration production companies that I bought. And Northern Oil and Gas is a little bit different company. They own land, and then they lease the land out to certain operators. So they have a bunch of different operators operating their land, and they get a certain percentage that is produced from their land of whatever they negotiate with the operator. So that company is very small amount of employees. It's almost like a royalty company, to be honest. It's a new business model that they're kind of using, and I don't know. I thought it was pretty interesting, so I threw some money in there because it was still down and it looked like it did very well last bull market, and it looks pretty promising to me. But that's just my opinion. You guys can do your own research, please. But a lot of these look really good. And if you guys are into the shipping companies, I just don't know as much about them. I always thought that the exploration production companies and some of the mining companies, like in uranium, would offer a lot more leverage. Some of these energy service companies can also offer quite a bit of leverage to the move. So, and shipping, that might be a very good area. So I'm probably got to start studying up faster than I know to capture some of these gains. So I'll start looking into more shipping companies. If you guys have any recommendations, put it in the comment section. I'll do some charting on it, and maybe I'll throw some money in it. Because if they're down and they're just about to break, and I see them start to break some patterns, I may throw some money in them. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't subscribed already. And thank you for listening. This is Finding Value.